Hello everybody, welcome to the live stream. I'm just making sure this has started because there's always a bit of a delay. I do watch it on another screen and so far it's still showing me the holding screen. Oh, here we go. Now we're working. So welcome to the live stream. We haven't done this for a couple of weeks because I've been away. Not much has happened, has it? The last couple of weeks been pretty boring markets, really. Of course, that's not the case. Seen plenty of volatility. Just to explain what this is, we do this every Friday normally, and it's a quick look ahead to next week, the major announcements for next week. Then we look at the major markets, indices, commodities, oil and gold, a couple of FX pairs, bit of crypto, looking at where the opportunities are, where the trends are, all that sort of thing. And then I jump into the questions and have a look at any markets you want looking at. So let's just get things started. Let's get the risk warning done first of all. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. I need to update that slide because I think the percentage of retail investor accounts losing money is more like 83% at the moment when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. There we go. And just on that at the moment, I think this is a very difficult time to trade because of the increased volatility. I think it's very easy to get sucked into chasing the market either way when it's swinging around like it is. You know, I said that number of losers, the percentage has gone up. You're seeing that across, I think, most brokers at the moment because these are hard markets to trade. You know, I'll hold my hand up and say the same for me. It's much harder for me than any point in the last few years, and I think to see stock markets moving like this, we've got to go back 14 years to the financial crisis. So I would say, I always go on about risk management in these sessions. Even more important than ever, risk management. And if you're not sure, there's nothing wrong with not doing anything. You know, you don't have to trade. And obviously we want you to trade, but I'm saying if you think it's all a bit crazy, I'm certainly trading a lot less than I was a year ago, just because of the volatility. And this volatility will pass, and we'll get back to more calmer markets. But no, it's still pretty crazy. So just be careful. Right, important events for next week. I picked out a couple. There's more than a couple, obviously, but given that inflation and interest rates are the theme at the moment, Monday we've got the Chinese interest rate decision. That'll be interesting. We had that big rise this week, didn't we, from the US? Was it the largest rate rise in 30 years or something? When they whacked up base rates 75 basis points. In the UK, we did a quarter of 1%, didn't we, I think, on Thursday, yesterday. So interest rates very much a big driver for the markets at the moment. And then next Wednesday, we've got UK inflation data coming out the 22nd of June. So it'll be interesting. See what that looks like. I mean, they're talking about inflation hitting 11%, I think, weren't they? I think at the moment, is it about 9% in the UK? Just under 9, so 11%. But it definitely feels, unfortunately, there's a lot more pain on the inflation front to come. And clearly, one of the factors driving markets at the moment is the uncertainty about that. I'm sure if you were around a year ago, you remember the chat about inflation a year ago from central banks. Don't worry about it. It's going to be transitory. It's just going to be a blip. All of that sort of stuff. And here we are in anything but a blip, obviously, when it comes to inflation. So tricky times. Quick catch up with the contact details to open an account, a real account, a demo account. Go to Capital.com. Any questions, drop me an email, david.jones@capital.com. Don't drop me a question with should I buy Netflix, but any general questions about trading, drop me an email. You can follow me on Twitter @JonesTheMarkets on Twitter, and to find out more about me and the trading course I run, go to jonesthemarkets.com, and of course follow Capital.com on YouTube, Twitter and Facebook. If you're watching this, you're probably subscribed to our YouTube channel anyway. We put out regular content throughout the week, normally 3 different markets and a few different things in there as well. I think next week I recorded a debate on inflation between 2 economists earlier this week. So that should be edited and go out on the channel next week. So that'd be interesting, a little bit different for us. Not so much a markets focused thing, but clearly talking about why do we have inflation, who's caused it, who's going to fix it. So that should be going out next week. Right, let's take a look at the markets. Let's start off with stock markets, shall we? S&P 500. The trend is still down on the S&P, not surprisingly. So the S&P 500 at the moment is trading where it was in sort of February of 2021. So that is, it's nearly an 18-month low, isn't it? Not quite an 18-month low. It was only yesterday this market hit its lowest point for this down move, this sell-off that we've been in since the second trading day of January, pretty much. So for me, in stock markets, any strength still looks like a selling opportunity. I am short the S&P in my own account. I'm short the S&P. In this account, which is a real money account, and we use it for the videos, the biggest winner at the moment, not surprisingly, is a short Nasdaq trade. And it did that on only the 1st of June, so only just over a couple of weeks ago. So sold the Nasdaq at 12.6. It's currently 11.2. £300 risk on the trade, and that trade is up £900. So that trade's done really well, making 3 times the risk on that trade. We'll take a look at the Nasdaq in a minute. If you want to see the reasons for that trade, the video, go and watch the video from the 1st of June that's on our channel. But we'll take a look at the Nasdaq anyway, like I say, in a minute. Let's go back to the S&P. So I think it's really nervous markets. I mean, what's the S&P down for the year? 4.8 to 3,700. That's that 1,100 points. So it's 20%. Does that sound about? That sounds about right. Yeah, slightly more than 20%. I think it's down about 22% for the year to date. The S&P 500. So for me, even if we see it ramp up from here, I'd be personally looking for the selling opportunities. You know, for those of you who are fans of RSIs, it is oversold on the RSI. This is the most oversold we've been since January, the last week of January. So, you know, perhaps there's going to be a little bounce coming, but for me, I'd be using it as an opportunity to sell short. And again, for me, it's got to break at least 4,200 to suggest this downtrend is over. That's a long way. It's 500 points away from where we are now. You know, that's what, about 13-14%. So even if it jumps up 10% from here, the S&P, for me the trend is still down. So really nervous stock markets. I don't think we've seen the worst yet. Let's see what happens over the next week. So Nasdaq, same thing on the Nasdaq. So look at there we go. So the Nasdaq is, I need to redraw that trend line. So the Nasdaq yesterday traded down to near 11,000. So it was worst levels since November 2020. I mean, it's pretty incredible, the sell-off in the Nasdaq. So it's gone from 16,700 in November to 11.2 today. You know, that is it's a big old fall, isn't it? 5,500 points lower. So that is, doing the maths in my head, it's more than 30%. We've seen the Nasdaq off since November of last year. So again, for me, yes, it is oversold. You know, it did go oversold back here. It took a while. This is in early May. Turned around and we had like a week of a bounce, 5 days of bounces, and we've just slipped lower again. You know, so for me, okay, it is oversold. Maybe we'll see it snap back a bit higher. But again, for me, any strength still looks like a buying opportunity. And I think, you know, for stock markets, the levels to watch are the highs we saw in early June. You know, we saw the S&P and the Nasdaq run up in early June, only to get smashed back down from there. So for me, until we see these highs broken, on the Nasdaq, it's about 13,000. I'd still be looking for opportunities to sell short. So let's see. That's the Nasdaq. Let's have a quick look at some more stock markets. FTSE has done well, I should say, has outperformed the US markets. Because if we look at the FTSE, it ended last year around 7,400 and it's trading at 7,100 near enough at the moment. So it's only down 5% for the year, whereas the S&P is down 20% for the year. I suppose, and the FTSE, it underperformed on the way up from the COVID lows. It lagged on the way up because it's full of, boring is the wrong word, but traditional blue chip, make a profit. There's no Teslas or Netflixes in the FTSE, is there? So lagged on the way up and hasn't been hit as hard as the way down. I suppose an aggressive trade on the FTSE, depending on where things end up today, we've seen it stuck pretty sideways since November last year, swinging around. An aggressive trade could be to be a buyer with a stop the other side of 7,000 if we think it's going to pull back into at least the middle of the range. So just playing this sideways range in the FTSE, that could be an aggressive trade, I think. Let's see. If US markets fall off a cliff again today, that FTSE is going to get dragged down, isn't it? But that's an interesting one because it is a market that's sort of doing its own thing a little bit, isn't it? If we have a look at the Germans, the German 40, the DAX. Let's just clear these lines up. Yeah, the DAX is interesting. Again, I wouldn't be a buyer, but it's interesting that the DAX has not taken out that March low. Okay, so again, FTSE and DAX, slightly different makeup, well, quite a bit different makeup than some of these US indices. So another interesting point, if we are going to get a rally, or we're going to see at least US markets stop falling off a cliff for a little bit, there's definitely some scope for this FTSE and the DAX to push a little bit higher. So, the DAX lows were down at 12.4. We're currently trading 13.1 or thereabouts. So let's see what happens. For me, as I always say, the market I always watch is the US market. So I don't watch those markets, the European markets, so much, but it's quite interesting there. And the Japanese market, we do have a short, I think, on the Japanese market. Again, the trend in the Nikkei, for me, is still down since September last year. Lovely shorting opportunity here. When it breaks out the trend line, but as I often say, just because something breaks out the trend line doesn't mean the trend is changing, and runs out of steam ahead of the old highs and has fallen off a cliff. That was a nice short, that was. We're back now to the mid-May lows, and again, perhaps we'll see a bounce here. I think if we see, these markets are interesting, DAX, FTSE, Nikkei, if we see US markets stabilise, perhaps we will get a bit of a bounce in these markets next week. But for me, I always watch the US markets. Where's our Japan short? There's the Japan short. I think we did it in a live stream, actually. Yeah, on the 29th of April. So we've been short for a long time. Short from 27.3. The market is 26,000 and a bit at the moment. So probably let's move that stop to break even. Let's go 27,000 on a stop. There we go. Because that trade's been in place for a long time. So let's move that. So that's stock markets. What should we do next? Let's do gold. I did gold and oil. I hesitate to use the word unlucky because I think if you start using that word when trading, you put it all down to luck, and that's not the way really you should look at trading. I did a video on gold. I can't remember when I did it. Was it earlier this week? Maybe it was. And I bought it, and I was too aggressive with the stop. I put the stop, I think at 18.20. I think the market was here. I think it was breaking out. I can't remember. And I put the stop at 18.20, and really I should have probably have gone the other side of 1800. So I was a little bit too carried away, I think, in the excitement of placing a trade there. So for me, I think gold is quite a boring market. I've said this a few times. We had obviously excitement as a result of the Russian invasion of Ukraine, but I don't think we're going to see 2,000 plus anytime soon in gold, but I would be tempted to be a buyer, and I'd still be in the position if I hadn't had too tight a stop on it, because we've seen, since, if we go back to here, December 1750, good support. Jan, the lows for the year. That was a really bad start. I should have put it underneath the lows for the year. The lows for the year, wherever that is, 1780 or thereabouts, and the market spiked down to 1780 in May. So for me, if I was going to do a trade today, I'd be a buyer, and I'd put the stop. If I was trying to hold the position, put the stop either the other side of 1780, which are the lows for the year, or the other side of 1750. But I do wonder if we just see a fairly scrappy year for gold now, again, like we saw last year. So I look forward to the comments from the gold bugs in the comments. But, last year, the price of gold was down 3.5%, pretty scrappy year. We've had a run this year to look at the all-time high, couldn't break the all-time high. I just wonder if it's going to be another tricky year for gold. It doesn't mean there aren't going to be opportunities at the extremes, but for me, there's not an awful lot to get excited about when it comes to gold at the moment. And oil, I did a short on oil, got stopped out on that as well. The very unfortunate. I put a stop at 120, and it did blip up at 121. It did take that level out, and it's come off since then. I think oil, for me, again, it's a bit of a boring. Is it a boring market? It's more boring than it has been. I mean, clearly we had the run from December last year down at 64 up to 125 because of the Russian invasion of Ukraine. Then we were trading in this sideways range, and it blipped out the sideways range for a bit, and it's pulled back again. So for me, on oil, what I would be looking to do now is to buy the dip on oil. So I think we might have a look on the hourly chart to get a better idea. So for me, the trend since April looks something like that. Let's flip this over to an hourly chart. So I did trade oil from my own account this week. So I bought it this week, and I've come out of it. I made a bit, didn't make much compared to my risk. So, but it was an okay trade. So for me, this is the hourly chart on oil. And I think from a short-term point of view, not a longer-term point of view, but a short-term point of view, it's interesting because 110, 2nd of June, that was the low. And interestingly, the market came down pretty near 110 yesterday and rallied, $5. Is that yesterday? Yeah, $5 off that level. And here we are, hurtling back towards 110 again. So I think, for me, it probably wouldn't be a trade today, but I think that's an interesting one for Monday. If we see oil, again, start to form perhaps a bit of a base down here on the hourly chart. So maybe we'll see another little push higher next week for oil. But you can see the trend is up, going back. Where's this going back? A couple of months or so. So I'd still be buying a dip for oil. We've got 110 support. We've got 108 support. We've got really big support down at 102, 103. It's all about where it stops, really, from here. Let's see. But based on the dailies, and I've said this before, I wonder if oil ends up being a bit of a flip-flop market again for the next few months. So nothing too exciting, maybe. Let's see. Let's see what happens. What should we do next? Let's look at some currencies. Let's look at, should we do Euro first? Euro against the US dollar. I've seen a few mentions for Dolly Yen, so we'll take a look at that. So Euro dollar, so they haven't raised rates, have they? They've signalled that they're going to raise rates in July, haven't they, the European Central Bank? And they called that emergency meeting, I think, this week, didn't they? Because of European bonds. So there is the rate rise coming. The big trend in euro against the dollar, absolutely still down. Going back to at least May of last year. So we've been in this downtrend now for just over a year. I did have, let me see if I can find it. I did have a trade on, I did have a trade on euro dollar that I've been running for a while, and that got stopped out. So that I only made 262. In the end, got stopped out yesterday, so I ramped. I brought the stop loss down because I'm quite guilty of not paying attention to the open trades in this account. So we closed out the euro dollar short. So for me, on the daily charts, absolutely still looking to go short. From my point of view, if we get a big rally from here, maybe up to 108 again, near there, it looks like a good short. I suppose if you wanted to be really aggressive on this, if we flip it over to an hourly chart, you could take the view that it's trying to build a short-term base here. We saw the lows in at 103.50 in May, came back down to it a couple of days ago. On that, I think that would have been, was that the ECB meeting? I think it was, I don't know. So we're seeing 103.50 hold for euro dollar in the short term. So if you absolutely wanted to go against that trend, the big 12-month downtrend, then perhaps if we saw a bit more weakness next week, let's see if 104, 103.50 holds. So maybe, because these markets have been so beaten up now for what feels like a long time, there's always the scope for a move against these big trends. So it might be an interesting one to watch for those of you who like going against big trends next week. But based on the hourlies, there is that base coming in there. Let's talk about pound against the dollar. So we had the interest rate decision yesterday on the pound. So it went up 25 basis points. So the pound just this week traded down to 119 against the dollar. It's the lowest since March 2020. It's a 2-year low against the US dollar. Again, for me, the big trend in the pound, it's not up, is it? The big trend is down, obviously. So we've gone from 143 a year ago to 123 today. So it's lost nearly 15% against the US dollar in the last year. So for me, still looks like sell the strength sort of trade. A bit messy, I think, over the last week or so. For me, if we sort of rally up to 126, it looks like a good short, I think. Pretty volatile the last few days off this announcement. I thought what was interesting yesterday, let me show you, and I wasn't going to trade it, but I was watching it, and I thought when the announcement came out, which was, I think my platform is an hour behind UK time. So when the announcement came out yesterday, which was here, Bank of England's announcement, the market tanked, relatively speaking. This is a 5-minute chart. So it went from 121.50 down, it dropped about 100 points down to 120.50. But I was watching it. I thought it's interesting that it's held above the low from the morning and the low from back here. And I remember watching it thinking, if you really wanted to be an aggressive trade, watching how the market reacts around news is always interesting. And it got slammed back, but it held above these old lows. And since then, that would have been a great trade. It's always the way, isn't it? It's always the trades you don't take are the great trades. And the market ramped up 300 points and drifted. For me, let's see what happens next week. You could build the argument. We've been trending higher for a couple of days. So on the hourly chart, we've got, again, a bit of a short-term uptrend, a bit similar to the euro. So if you wanted to go with the shorter-term uptrend, but against that bigger downtrend, it's maybe an interesting one again from next week. What's next? Dolly Yen. A few people mentioned Dolly Yen, didn't they? Let's have a look at that. Dolly Yen. So for me, flip it to a daily. There we go. So the story here is still US dollar strength. It's a story, and of course yen weakness. It's a story that's been playing out, this aggressive bit of it since March of last year. So this year, sorry. So for me, absolutely still a buyer of Dolly Yen on weakness. It's a massive turnaround. I would have missed that. That's turned around so quickly. Look at the last 2 days, sells off, and today it's almost clawed back 2 days of losses, Dolly Yen. So for me, I would probably be tempted to sit on my hands here and just wait to see what happens next week. Because if I was a buyer now, I'd want my stop down here. And that's only yesterday's low, but it's 300 points away from where the market is. So for me, it's not a trade for me. It's clearly strong. I suppose if you wanted to go massively against the trend on Dolly Yen, you could go short here. It's not something I would do, but you could go short here, 134.70, with a stop above that high, which is about 135.70. I'm just going to open the window because, not surprisingly, it is baking here in the UK today. So that if you really want to go against that trend, you could do that. Me, I'd rather wait to see if we get a bit of a weakness and perhaps a buy the dip. But Dolly Yen, it's been a phenomenal. Look at this. Actually, look at this. Look at this sentiment. This is great insight here. This is one of the reasons why most people lose money. What is the trend in Dolly Yen? And you're sitting there thinking, well, don't be so stupid. It's obvious what the trend is in Dolly Yen. The trend in Dolly Yen is up, and it has been up for 18 months. What are our clients doing? Here we go, right-hand side. 65% of clients who have a trade in Dolly Yen are short. Okay, so you have this massive rip your face off uptrend, and what are people doing? Trying to pick the top. So, you know, if they'd all gone short today, then perhaps, but no, lots will have been short for some time in this. And this is, you will see this anywhere you can see market sentiment. If you can find a strong trend, I can almost guarantee you that the majority of sentiment will be the other way. Okay, and here's the absolute perfect example in Dolly Yen. Dollar index, always worth a mention, the dollar index. I know I often say this, one of my favorite markets, the dollar index, the dollar against a basket of different currencies. I've had trades in this since the beginning of last year. I've got a position at the moment in my own account in the dollar index. And of course, you know, we're seeing dollar strength because of both inflation and interest rate expectations. And also as a safe haven. You know, I think we talked a bit about that around the time of the Russian invasion of Ukraine, how gold hadn't acted how we might have thought it should have acted, but the dollar has, you know, so the dollar index is up here. So for me, absolutely still a buyer of the dollar index on dips. Now, how high is this? Let's see how much data we've got. How high has the dollar been this week? Okay, I don't have the data going back. I'm going to have a look on something else. Just hang on a second. This must be like, I think 20-year highs, mustn't it, for the dollar index, like Dolly Yen. Hang on a second. DXY. Let's have a look. Let's drag it over. I'll show you just on another charting thing. So this week the dollar touched its best levels since 2002, December 2002. So a 19-year plus high. So for me, the dollar index, the trend is obvious to me, and it should be obvious to anybody who is in the possession of eyes. The trend is up. You know, yes, it is overextended from the trend, that longer term trend. So there's definitely scope for a pullback here. You know, but for me, even if the market dropped 400 points from here, back down to 100, absolutely looks like a buy to me. So I think any expectations for a crash in the US dollar are massively over emphasized, or whatever the word is I'm looking for. So, you know, and I say this every week, great market to watch, the US dollar. If you don't want to watch 20 different FX pairs, just watch the dollar index. It's always a good market to watch. Right, what are we doing next? Oh, I know what we're going to do next. Someone should play the funeral march before we get into the next bit. The world of cryptocurrencies. All those poor little hodlers who stuck with their Bitcoin since 68,000, and here we are at 20,700. I'm sure this is just a temporary dip before Bitcoin hits 500,000. But I mean, it's been pretty brutal the last month, 6 weeks on Bitcoin. I did buy it. I said I bought it, didn't I? I bought it in here somewhere, or here. I can't even remember. But I got stopped out. Got stopped out for a small loss because I was wondering if the old levels around 33 were going to hold, and they haven't. And here we are on Bitcoin, worst levels since December 2020. So, still looks pretty weak, I think. And I often say this, but for anybody who's not heard me say it before, I think Bitcoin is a really bad market for a couple of reasons. Not because of the nature of the blockchain and all that sort of stuff, because I don't even understand that. To me, it's just another market. But it sucks in people who wouldn't trade normally, but because their mate made some money on Bitcoin or Ether or Dogecoin, it sucks these people into trading. And then when it sucked them in, I'm giving it a personality. It doesn't have a personality, obviously. It's just numbers. But when it sucks them in, it teaches people bad trading habits, or it has done, you know, over the years. You know, because if we go back to here, the last bubble in Bitcoin, December, or the second to last one, December 2017, the market goes up near 20,000 and then dumps back to 3,000 by December 2018. Yeah. Runs up to whatever it is, 65 in April, and dumps to 30, so halves into June of last year, and then doubles again. So it rewards people for being really bad traders by sticking their head in the sand. Yeah, it is my weekly crypto rant, isn't it? You're right. And I just wonder if this time round, bang, is this the time when it doesn't come back? Let's see. So for me, that trend is still down. Okay, so a trend from up here is still down. I got no interest in buying it. I've got no interest in shorting it either, actually, because just the volatility is too nuts for me. I think that this is another reason why I don't trade it very much. If I was going short now, I would want my stop loss above those highs, the late May highs, 33,000. That's 13,000 points away from where we are now. It's a massive stop loss. So for me, if it rallies back up above 30, perhaps it looks like a short again. But and I think if it breaks 20,000, I wonder if we'll see like a waterfall of selling where everybody, or not everybody, but lots of people finally chuck in the towel. Let's see what happens. And I'm guessing Ethereum looks the same, looks pretty much the same. So Ethereum is off, what was it, 4.8, and it's about 1,100 today. So that's gone a lot, hasn't it? It's gone about 70% down. And again, so Ethereum, we're back to where we were Jan 2021. So back to where we were a year ago. But if you were really fundamentally convinced about the future for crypto, you're absolutely getting bargain prices today, aren't you? Absolute bargain. It's like having a time machine, going back a year and a half ago and buying where it was back then. And again, I wonder with Ethereum, is $1,000, will that end up being something of a, what's the word I'm looking for? Don't know, floor, psychological floor for Ethereum. Let's see what happens, but far too volatile for me. So we're gonna jump into the questions, or I'm gonna jump into the questions in a second. So markets to watch, what to watch. So for me, as usual, the two stock markets I watch, the Nasdaq and the S&P. So perhaps there's a chance of a short-term bounce from here, but just bear in mind you are going against this massive, significant downtrend that's been in place this year. If I was a buyer now of the S&P at 37, wherever it is, 3,690, I would put my stop loss under yesterday's low. The risk reward is good, because if we did see a half decent bounce, we could get quite a run here, but we are going against a major trend and we're picking a bottom. Okay, so stock market's still weak. Personally, I'd still rather be a seller of strength. I think oil is interesting, but not till next week because of the hourly chart. What's going on with the hourly chart? I think daily still in this wide sideways range, but on the hourlies, we've got a 2-month uptrend going on. So for me, I think maybe there'll be a buying opportunity. Didn't do natural gas, did we? Let me do natural gas. Didn't look at natural gas. Natural gas has been absolutely nuts. Natural gas. I did a trade in it yesterday. Bought it yesterday. I think the video was there yesterday. I think it is tempting. Let's see which way. Hang on. Which way are clients on natural gas? I'm going to guess that clients are mainly short natural gas. Oh no, I'm wrong. Okay, 83% buyers. Well, that's a surprise. So for me, there's our natural gas trend. The market has been hit very heavily over the last week or so. I bought yesterday in this account on the video with a stop under 6.5. It's a really volatile market. I think if 6.5 breaks, the risk is we'll get a bigger sell-off. Personally, I wouldn't trade it with my own money at the moment, natural gas. So when we do these videos throughout the week, always like to put a trade on because it makes it more interesting. But for me, it's quite hard to trade again because of the volatility. Because it was 9.5 just over a week ago, and it's been 720 since then. That's big swings, 25% swing in a week and a little bit is a lot of swing for natural gas. But I would argue the trend is still up in natural gas. Let's see what happens. But not a market for me at the moment. Oil, I think, is the more interesting market. So oil, perhaps we'll see a bit of strength coming next week. And as ever, the dollar index. So the dollar index, seeing a strong move today, as in Dolly Yen. What do we see next week? Let's see. If it breaks out again, to be looking obviously for further strength. So I don't think, again for me, I don't think there are as many opportunities as there usually are because of the extreme moves that we've seen in markets over the last week or so, perhaps. But as ever, there's always some interesting stuff to watch. So let me just do a quick reminder of the contact details. Capital.com to find out more about the company. Download our app open an account, all that stuff. Any questions? david.jones@capital.com. Follow me on Twitter. I don't tweet very much, @JonesTheMarkets, and jonesthemarkets.com to find out more about me and the trading course I run, and follow us on YouTube, Twitter, and Facebook. Right, let's have a look at some of these questions. Let's have a quick look. Hold on a second. What do you think of Alibaba? Good one. Let's have a look at that. Downtrend broken. Downtrend broken. Alibaba, from memory, had an absolutely brilliant downtrend, didn't it? Whenever we look at it. I can see what you mean. I would go short, though. I would take that as a false break in Alibaba. Perhaps that's the trade we can do. But I think, actually, there is absolutely a reason for going long or short here. So I'm going to take the view. The trend in Alibaba has been down since October 2020. Yes, it has broken out of this downtrend, but there is still, for me, like a bucket load of resistance about 130, and then up here at wherever that is, 140. So for me, I wonder if it's overshot a bit to the upside. So we'll put a short on in a minute and see how it works out. But you could take the view, the flip side of that, because of course it's two opinions that make a market, that since March it has been trying to stage a bit of a recovery. Yeah, so you could absolutely take that view, but I'm going to take the view that it's a sell, and I'm going to put a stop loss at 135. So let's do that. We'll sell short. So we'll put our stop loss in at 135. It's a volatile market, volatile stock. We normally risk about £100 on these live stream trades. There we go. So it's 105 at the moment and a bit. Going to sell 4. Going to put a stop loss in at 135. If I get stopped out, I'm going to lose £97. Let's sell it. So, that has been an interesting one over time. But for me, because it's the first break of the downtrend, I'm inclined to not believe the first break. So we'll see. We'll see where that goes. But you absolutely could say, well, hang on, isn't it trying to trend upwards? So let's keep coming back to it, because perhaps we are seeing a change in Alibaba. Let's see how it works out. Hi David, are we having RSI divergence on the 4-hour time frame for the S&P 500? Let's look. I must admit, I never look at 4-hour charts. We all have our personal preferences, but let's have a look. The 4-hour chart on the S&P. Yes, good spot that. So divergence is where the market pushes to a low here, for example, 13th of June, pushes lower still, but the RSI makes a higher low. So this can be a suggestion that perhaps the market you're watching is running out of steam and we could get a bounce. There's a similar setup back here. If we go to May, so the market hits a low, RSI goes oversold, market pushes lower still, RSI makes a higher low. This is bullish divergence. So the same thing happening here. Interesting to see if we do get a blip. So again, if you attempted to be a bottom fisher on the S&P, there's a reason off the 4-hour chart if you fancied a buy. Let's see. Do you use any indicator to measure volatility? No, I don't. So I don't use. I mean, a common indicator is something like average true range, I suppose, isn't it? Where is it? Average true range. There we go. So this is the S&P average true range, the red line down here. Let's zoom it in. So it does what it says on the tin. Yeah, this is I've set this, or this defaults to 14 in this example. So it's if I make it a daily chart, actually, it'll make more sense. So it's a 14-day. It's an average true range for the last 14 days of the S&P, and it's a rolling thing. And you can see back in April it was about 66, and then as the market got more volatile, it pushed up to 98. The most volatile period so far was in March, based off the average true range, but I don't use it. So for me, when it comes to looking or gauging volatility, I just use my eyes. So that's what I use personally. Right. People have got used to low rates since 2007, 2008. Some of us old enough to remember inflation in the UK over 20%. And rate rises in a day, but about 3 rate rises back in September '92. I remember those days as well. and what it did to mortgages back then in the early 90s. And you're right, it's investors, first of all, have been very spoilt by the last 14 years. You know, if you look at something like the S&P, we have had the odd drama. I mean, the COVID sell-off, you know, one of the shortest bear markets in history. Market peaks February the 24th, 2020, and hits a low about a month later. And then, of course, we all know what happened since then. You know, we've had lots of years of rising markets. We haven't had, it feels like anyway, we've not had a proper bear market for a long time. You know, whether this year ends up being, you know, going even further down is going to be interesting. But it is definitely a time that plenty of us as adult investors have not experienced before. And like you say, with the interest rates going up as they have been, you know, it's, well, there's a lot of unknowns this year. Devon Energy. Let's have a look at Devon Energy. Let's have a look at those. I remember those from before. Is that Devon Energy? Yes. I mean, for me, I think we've obviously looked at these before because there's a trend line on there. There you go. So for me, it's a sit on my hands and buy the dip. Sit in my hands and wait for the thing to stop selling off and buy the dip. So for me, you know, interesting levels to watch. It looks like about $50. You know, it was a big base back in Feb of this year, and again in March, and it traded down. You know, even in April, May, traded down to about 53. So it's trading at $61 at the moment. Still pretty weak. You know, it's really hurtled lower over the last week or so. It'd be interesting to see what happens if it gets near 50. But for me, you know, that trend since October last year is still up. So it still looks like a buy the dip. Copper. Copper's been... I've got a trade in copper in my own account. Is there one in this account? Hang on a second. Is there a trade on copper here? Yes, there's a trade on copper here. It's losing money. Where did we buy it? Where did I buy it? 4.15. Okay, let's have a look at those. Copper. Copper, of course, is seen as a barometer for the global economy. One of the things. And if the price of copper, if the expectation is that economy is going to expand, you know, we'd often see the price of copper leading that higher. At the moment, of course, lots of worry about the economy, copper getting hit. And for me, this is a really big level. These lows, this trend has gone, whatever trend that was. So for me, it's all, is it going to hold around 390, 380 to 390? So can't remember where the stop loss was on that trade. Where's the stop? 390 is the stop on that trade. And it's whether there's a base, is it going to hold? You know, it's done a really good job all the way back to April last year, the sort of 390 area, 390 to 4. It's pretty weak today again. Let's see what happens. You know, maybe if copper starts breaking below that, we'll see the start of a move in copper. For me, I'm still long with stops down at 390. Let's see what happens. Shorted JP Morgan on the last swing high, but no clue what to do next. Well, who knows? Let's have a look. JP Morgan. Oh, it's good, isn't it? That's a good short. That nice trend. So it was a good short then. If you'd have gone short here, I'm guessing. I mean, for me, I never have, you know, targets in mind. I just move the stop loss down personally. I mean, it does look weak considering that just over the last few days it broke below those old lows from May. But, you know, absolute definite downtrend in JP Morgan, isn't there? So it's all about really, you know, where, I mean, for me, I would probably start moving a stop down. It's up to you how close to have it. But, you know, just yesterday, it made a new low for that down move. So that's been a good trade for you, isn't it? So, yeah. So for me, I would still be looking to sell into rallies. I mean, it is if you take any notice of RSIs, it's really oversold on the RSI. Not really oversold, it is oversold. The last time it was oversold was back here. It only went up for 2 days, though, before sliding again. Let's see what happens. So, yeah, I would have a stop in place to lock in some profit, but try and give it enough room. If it falls off a cliff again, then you're still in the trade. Let's see. If you move your stop loss to break even and the trade hits your new stop loss, do you re-enter the trade because it's turned around and goes back the direction you thought it would? Good question. That's a good question. And the quick answer is no, I don't. But there's no reason for not doing exactly what you said, actually. So let's see if we could find a trade. What trades? So you move your stop to break even. Yeah, I think that does seem pretty logical, doesn't it? That I would probably wait at least a day. So if I was, let's say I bought somewhere, the market moved up, I'd move the stop to break even, sells off, hits my break even, so I'm out for nothing. You're right, it hasn't really changed my overall view of the market. I'd wait a day at least and wait for the charts to line up or something like that. But you're right, actually, if you get stopped out at break even, it's definitely well worth looking at that market again, because you haven't been wrong, you've perhaps just been a bit too aggressive with your stop. What about a short on Cineworld? Cineworld, I mean, that was really volatile, wasn't it? It's the UK cinema chain, isn't it? I mean, for me, I don't like shorting stocks that are just so beaten up. I mean, you could do if you went short, but where would your stop go? Well, for me, I'll tell you where my stop would go. So they're trading at 21 pence. I would need my stop. The high is 29, so I'd need my stop at, I don't know, 32. So it's almost a 50% stop loss. So to have a 2-to-1 risk reward on that, it needs to go bust, basically. I'd need to sell them at 21 and buy them back at 0. So for me, personally, it's only a personal thing, shorting these stocks that are so bombed out is not something for me when they're down at 21p. But absolutely, the trend, I'm absolutely sure people have been buying this thing left, right and centre, haven't they? All the way down, because how much lower can it go? Well, newsflash, at 21p, it can still go down another 21p from where it is. Aston Martin's another one, isn't it? As a car fan, I do keep an eye on Aston Martin, but it's been an absolute, another absolute downtrend. Absolutely pummeled. And I bet there are a lot, here we go, 93% of people who have a trade in Aston Martin with us are buyers of the stock. Let's have a look at Cineworld. What was the number on Cineworld? So yeah, we absolutely wouldn't be a buyer. There we go, 93% buyers on Cineworld as well. Isn't that weird? Both the same. Yeah, so for me, when they get down to the levels of pennies, they can be really volatile. And for me, perhaps the risk is too much for my style of trading. Do you think current extreme fear sentiment is indicating a big reversal is coming soon? It's a good question. And you're right. I think fear is definitely, or pessimism or negativity is definitely at an extreme. And it's exactly when we have those sort of extremes, if you look at the Nasdaq, that we do get sharp moves in markets. So I wouldn't bet on a sharp reversal that suddenly we see the bottom and that's it, markets go back to going back up again. But I would absolutely think there's a reasonable chance of another half decent rally. If you look at the Nasdaq back in March, it ran from 13,000 to 15,000. So I think with all the news being so bad and everything very pessimistic, it's completely the right time when everyone thinks I'm going to go short and the market just runs higher. So which for me would just give me a better opportunity to go short at. So let's see what happens. But yeah, so I think that's good insight there into market psychology. When you do hit extremes, it's exactly when the market does the opposite. What do you think about gold for next week? We did talk about gold. I mean, for me, nothing at the moment. I think it's a boring market, but if it dipped back down to 1820 next week, I could be tempted to be a buyer. But for me, again, I think it's a bit of a dull market. We did look at Dolly Yen. I'll talk about Euro Yen. My biggest winning trade for me personally in May was Euro Yen. I absolutely nailed it, even if I do say so myself. Which after the bad luck I had with the gold and oil trades the last couple of weeks, luck is a bit cyclical. So I bought Euro Yen here for my own account in May because the trend is up as usual. The market had broken out. We had this big sell-off. There had been big support, and there was no follow-through on the sell-off. And the next day it went up. So I thought I'm going to buy it and put a stop loss underneath that low. So a stop loss at 132, bought it at 134.5. And then, this is, for me, it doesn't happen very often, but it's a perfect trade. When it just goes up every day for a couple of weeks, it makes managing the trade really easy. You just put your stop up a little bit every day. So I'm out of the trade now. But absolutely, I would be a buy. Actually, maybe that's the trade we'll do now. We'll do a trade on Euro Yen. So the thing has run up, has sold off, has run up again, has sold off. So it comes off 600 points. Bit of a spike down yesterday. So for me, let's say the trade I'm going to do, if we flip this over to an hourly chart, just to pick up on the trend. I mean, it's a bit of a, where is the trend? What trend am I trying to pick up on? I don't even know what trend I'm trying to pick up on. Perhaps off those March lows. So for me, absolutely, the trend is still up. Perfect. Come back to that trend line yesterday. So stop losses underneath that low 130. Oh, let's say 136.50 for a stop. That's quite a big stop though. 137. Let's say 137. So we'll put a stop in at 137 and see how that works. So we're going to risk 100 quid as usual. What's 4,000? There we go. We buy 4,000 Euro Yen with a stop at 137, the other side of these lows, for £100, £106 risk. And for me, the thinking behind that is that perhaps we're going to see another sharp move in Euro Yen. If it repeats just half of that move, that was a 1,200 point move. Then we get a 600 point move. We go up to there, 148. So let's see what happens with that Euro Yen. So for me, still bullish Euro Yen, and it was a really worked out really well for me in May. That one. Let's see what happens. We did Euro Dollar. Will the dollar index reach 120 this year? I don't know. What do you think? Let's have a look. Where is it now? 104. I mean, it would have to do another 15% nearly from here. Do you think the dollar index is going to go up 15% in the next 6 months? I think, again, as much as I love the dollar index, going back to the question a couple of questions ago about sentiment being at an extreme, the dollar has been so all-conquering this year that it starts to feel as if perhaps sentiment is getting too bullish around the dollar. So will it get to 120? I mean, how far has it moved this year? I mean, this year it's moved 800 points from where it started the year. So and that's been quite a big move this year. So it basically needs to double that move by the end of the year. I can't quite see that. I think it will go higher than here, but I think it's a little bit overcooked in the short term. So I've got a trade on at the moment, which I'm happy with, but I'd be much happier buying a dip in the dollar index. But perhaps that will be the opportunity in the next couple of months. As these interest rates get factored into the market, perhaps we see some cooling off in this sort of runaway US dollar sentiment, and there's a buying opportunity as it corrects a bit in the summer. Let's see what happens. Okay, I don't know what that question's about. What do you think? Oh, silver. We didn't look at silver. Silver has been a real bogey market for me. Silver. Last year, I think from the trades I do on this account, couldn't get it right last year in silver. I only traded silver once, I think, for myself last year because it was a boring market. I'm currently short in this account, been short since the 13th of May from $20.49. The market is about $1 against me. I always, for some reason, always get wrong-footed by silver. But for me, I think I said last time round, I'm quite happy to stay short and see what happens. I got a stop in, I think, at 23. What was the question? Was about the hourly chart. And someone was saying, yeah, the hourly chart, 121. Yeah, I see exactly what you're saying there about 121.90, 122 being a problem. It's been a problem for the last week, hasn't it? And it's run out of steam here. I mean, I think for me, it's a horrible market, silver. Because it's just, look at it. If we go back, for me as a trend follower, the trend in silver is just sideways and scrappy. Yes, we get some big swings, but it starts a trend, then not immediately, but it reverses really quickly. So it's not a market that suits my style of trading silver. Short at the moment. Maybe we'll see under a bit more pressure from here, but absolutely not my favourite one. What do we reckon on Sainsbury's? Sainsbury's is one I follow, actually. The US stock Sainsbury's, UK stock, sorry, supermarket chain. I used to own Sainsbury's in my ISA, physical Sainsbury's. Got out of them because they're a good dividend payer. So they're still in there on my list. But the trend for Sainsbury's is down. So I've got it on a watch list to think about buying them again. But absolutely no interest in buying them just yet. It'd be interesting to see, down here, we did see this base form for Sainsbury's from 2019 through to 2020. From about 170 through to 220 at the top. So it's pulling back into that zone again. So maybe we'll see Sainsbury's start to make a base, but I've got no interest in buying until that downtrend stops. So let's see what happens there. Amazon to buy after the split. I would say no. I would normally it's not a buy because of the stock split. So normally stock splits are bullish, but we're in a market where everything's falling off a cliff. So I wouldn't buy Amazon just because they've split their stock. Just because they've gone from $2,000 a share to now $100 a share. I wouldn't buy them because of that. There is an argument. I did have a short on Amazon actually. It was one of the longest running shorts I had, or have I still got it? Where is it? Let's have a look. Let's have a look at closed trade. It's been short for ages. Yeah, I closed it for 500 profit at the end of May. So moved the stop down and came out of the Amazon short. I suppose if you wanted to be a bottom picker on Amazon, it's interesting. Perhaps $100 is going to be support. Let's do this trade as well. This is the trade we're going to do. We're going to be a bottom picker on Amazon. So we're going to take the view. The stock has gone from, since the split, it was trading at 186. It's almost halved Amazon since November last year. Even though stock markets are getting clobbered this week, Amazon is holding above $100. Let's do it. Let's do a little buy on Amazon and see how that leaves us. So we'll say 95 for the stop. And how many are we going to buy at 95? If I buy 15, it's 126 risk. By 10, somewhere in the middle. 12. I buy 12 shares in Amazon at 105, 20, whatever it is. Put a stop in at 95. Risk is 100 if it gets stopped out. And I think that's an interesting trade, because we have seen Amazon stabilize over the last month over $100. $100 quite often a psychological level, in markets, round number, all of that. Let's see what happens. Let's see what happens with that trade there. So I could give a really. Someone's put. Do you know anyone who's become a millionaire trading CFDs? And I would say the flippant answer with that is, how do you become a millionaire by trading? Start off being a billionaire, which is true because most people lose. Obviously, I know I know people who have made. A good friend of mine made a lot of money trading, but started with a lot of money as well. So I think again, it's important to keep this in perspective that we have clients who have $100 in their account. We have clients who might have $100,000 or more in their account. So it's all a function of your percentage returns. So I'm sure there are people who have made millions trading in the same way there have been people who've lost millions trading, but neither of those probably started with like a $500 account. Okay, so I hope that gives you an answer. And most people lose, of course, don't forget. It's quite interesting actually. I spent some time with some of our bigger clients in the last 2 months, okay? And I'm not giving any confidences away here, obviously, because I'm not going to say who they are. But all of these clients were making exactly the same mistake with much bigger accounts that people with $100, $500, £500, £1,000 accounts make. They were all in their trading going against the major trend, and all of them, which I was really surprised by, all the clients I met, the big clients, weren't using stop losses, and they were all losing money. Okay, so I think it's a great lesson there. No matter the size of your account, trade with the trend and always manage your risk. Okay, how are we doing for time, guys? I've got to get a move on here because I'm a little bit behind. Yeah. Let's have a quick look. I have to crack on. BAE Systems. Let's have a look at those. Another UK stock. BAE Systems. So it had a bit of a lift because the defence sector, of course, it's a UK defence stock supplying to the military and all of that. Had a bit of a lift, well, quite a lift, obviously, because of the geopolitical situation was when Russia invades Ukraine. For me, I'd much rather wait for a sell-off. I mean, for me, it's a buy because the trend is up. It's just where do you buy it? And it's always the problem for me when something runs away from its longer-term trends. Where do you buy it? Do you wait for a dip? See if we get a dip down to £6.50. Do you buy it now because you think it's going to go to £9? I don't know. But for me, it is a buy. It's just a question of where really is it a buy. I've run over, so I need to get a move on. So I'm going to have to skip through some of these questions. Aluminium. Let's have a look at aluminium. We haven't looked at that one, and we do cover it. We only started covering that this year. It had been a great trend, hadn't it? Absolutely brilliant trend in aluminium, and not so much. I mean, to me, I would absolutely have bought it here on that break of that trend line. Absolutely have bought it, and I would have been stopped out now. I mean, that still looks really weak, doesn't it? We're trading in aluminium. We're only back to last summer levels, I suppose, or August and November levels. So I think it's interesting because there was a base down here, whenever that was, about a year ago. There was a base where we're trading now. So 2330 to 2500 is an interesting zone for aluminium. So for me, I'd be thinking, maybe there's going to be a buying opportunity here over the next few weeks. But for now, that trend is down. So again, I assume we're seeing aluminium weaker because of the concerns about what's going to happen with the world economy and just less demand for raw materials like aluminium. So it's an interesting one today. So yeah, that's it. Okay, I am going to have to wrap things up there because I have overrun a little bit. So apologies for that. We'll do it all again next Friday at 2:30. If you're not subscribed, if you could subscribe, you'll get notified when we go live. Don't forget, any questions about trading, drop me an email, david.jones@capital.com, @JonesTheMarkets on Twitter, jonesthemarkets.com to find out more about my trading approach and the trading course I run. Follow Capital.com on YouTube, Twitter and Facebook. And like I say, it's a strange one at the moment. For me, stock markets are interesting because they've been hit so much. So maybe we get something of a short squeeze in stock markets next week. Oil, I think, is interesting because it's pulling back to, look at that, technical issues, just as we're wrapping things up. Oil is interesting because it's pulling back to where it was a big level. Look at this market, stock market is weakening again. It's turned lower again. Let's see what happens. And dollar index, as usual, because we are seeing so much focus on the US dollar because of interest rates and everything else. Right, so we had a lot to catch up with today. We'll do it all again next Friday. Be sensible when you're trading. Manage your risk. It's a very volatile market, still very volatile markets. More people than usual are losing. If you want to sit on your hands isn't a bad thing, but we'll come back to it on Friday and see where we are then. Thanks a lot and enjoy your weekend.